I want to share an idea that will totally change how you look at winning in the stock market. The average day trader makes over 100 trades every month, but they usually end up losing money. On the other hand, the best traders in the world make fewer than 30 moves in that same time, and they keep making profits. What makes them different? It isn't that they are smarter, have more money to start with, or use better apps. It is something way more basic that most people never figure out. In this video, I'm going to show you why patience isn't just a good habit to have. It is the strongest tool you can use. But first, I need to tell you a statistic that stopped me in my tracks. Researchers looked at over 50,000 trading accounts. They found that traders who cut the amount of trading they did by just 50% actually increased their profits by an average of 89%. Think about what that means for a second. By doing less work, they made way more money. This isn't just some nice advice about taking your time. This is hard math proving that waiting creates real, measurable money benefits. Yet for some reason, the whole trading world seems built to make you do the exact opposite. Every notification from your app, every flashing light on the screen, and every person on social media showing off their quick cash is designed to make you want to act right now. They are literally making money off your inability to wait. But what if I told you that the winners do something totally different? What if the real secret isn't finding more chances to trade, but having the self-control to ignore most of them? Let me tell you a story about two different traders to explain this. Linda sits at her desk every morning, looks at her list of stocks, finds 3 possible setups, and then she just waits. Sometimes she makes one trade, sometimes she does nothing. She usually makes about 18 trades a month and wins about 64% of the time. Then there is Mike, who is glued to his screens all day long, his finger hovering over the mouse, ready to jump on any movement. He feels busy and excited. He makes about 140 trades a month, but he only wins 41% of the time. On paper, Mike looks like he is working harder. He is putting in the hours and always doing something. Linda looks lazy compared to him. She spends most of her day reading and waiting. But here is what the numbers actually show. After 6 months, Linda's account has grown by 34%. Mike's account has gone down by 18%. They were trading in the same market at the same time, but they got totally different results. The difference isn't luck or skill or even their plan. It is patience. Linda knows something Mike doesn't. The market pays you for being exact, not for running around like crazy. She knows the difference between being busy and making money. Mike thinks moving fast means he is making progress. You see this same thing happening with professional traders. The best hedge funds don't trade all the time. They wait for specific things to happen, specific setups that meet their rules perfectly. Then they make their move with confidence. Berkshire Hathaway, one of the most successful companies ever, has held on to some stocks for decades. Warren Buffett famously said his favorite time to hold a stock is forever. But this isn't just about long-term investing. Even in fast trading, patience gives you advantages that most people miss. When you are patient, you naturally pick better setups. You avoid the noise that ruins bank accounts. You save your brain power for real opportunities instead of wasting it on random guessing. Think about it logically. If you are making 150 trades a month, you are saying the market gives you 150 great chances every month. That is more than 7 per day. Does that sound real to you? Are there really 7 guaranteed ways to make money popping up every single day? Of course not. What is actually happening is that impatient traders are lowering their standards. They take bad trades because they can't handle sitting still. They are confusing being busy with finding opportunity. They are trading because they are bored, not because they have an edge. Meanwhile, patient traders know that markets spend about 80% of the time doing nothing special, and only 20% of the time actually moving where you can make real money. They aren't trying to make cash off every tiny bump. They are waiting for that 20% where the odds are actually in their favor. This creates a math advantage that grows over time. Let's say both Linda and Mike risk 1% of their money per trade. Linda takes 18 smart trades a month with her good win rate and a high reward for her risk. Mike takes 140 trades a month with his lower win rate and worse risk to reward ratio. Even though Mike is doing almost 8 times more trades, Linda's picky style makes way more money with way less stress and time spent. But here is where it gets really interesting. The mental benefits of patience are huge. When you are patient, you are trading because you want to, not because you are desperate. You aren't chasing the market. You aren't trying to get revenge after losing. You aren't overdoing it because you missed out yesterday. Patient traders build what I call strategic confidence. They trust their plan completely because they did the work to prove it. They tested their ideas on past data. They know their real win rates and how much stress they can handle. This deep confidence lets them follow their strategy perfectly without second-guessing every choice. Impatient traders, on the other hand, are always reacting. They make choices based on the fear of missing out instead of a real plan. They jump between strategies because they don't stick with one long enough to see if it works. They are emotional instead of logical. This emotional difference creates a loop that either leads to success or failure. Patient traders win more often because they are picky. More wins make them feel good. Feeling good leads to better choices. Better choices lead to more wins. It is a positive cycle that gets stronger over time. Impatient traders have the opposite happen. Bad setups lead to more losses. More losses make them feel bad. Feeling bad leads to worse choices. Worse choices lead to more losses. It is a bad cycle that destroys their money and their confidence at the same time. The brain science behind this is cool. When you lose a lot, your brain actually changes. The part responsible for smart thinking gets less active. Meanwhile, the fear center gets super active. You are literally making yourself dumber and more scared with every bad trade. But when you are patient, you keep your cool. Your brain stays ready to spot patterns and manage risk. You are thinking clearly instead of reacting with feelings. But patience in trading isn't just sitting there. It is active preparation. While impatient traders are clicking buttons, patient traders are studying the market, watching the big money flow, checking the news, and getting ready for different outcomes. They are getting ready to strike when the time is right. This preparation gives them a huge advantage. When real chances show up, patient traders are ready. They have done their homework. They know exactly what they are looking for and what to do when they find it. They can act fast because they have been preparing for this exact moment. Impatient traders, tired from always doing something, often miss the best chances because they aren't ready. They are so busy reacting to noise that they can't see the real signal when it appears. They are drained instead of ready. The way the market works rewards this patient style. Most good moves happen during specific times when big money pushes the price. Outside those times, price movement is mostly random. Patient traders see these patterns and focus their attention there. Impatient traders treat all hours the same and wonder why their results are all over the place. Professional trading companies understand this perfectly. They don't judge traders by how many trades they make. They judge them on how consistent they are and how steady their mind is. A trader who makes 50 trades a month with steady profits is way more valuable than someone making 500 trades with crazy ups and downs. The prop firm industry proves this. These companies manage billions of dollars and need steady returns. They aren't looking for wild gamblers who get lucky sometimes. They want traders who can make steady profits month after month without losing all the money. When these firms test new traders, they look at a few key things: how long they hold trades, how many trades they make a day, and how big their losses are. Notice what is missing. They don't care about your biggest winning day. They don't care about your coolest trade. They care about if you can keep doing it. The rules at these firms show what actually works. Most challenges give you a profit goal with a strict loss limit. You need to make a certain amount while never losing more than the limit allows. This setup naturally rewards patient, safe trading over aggressive guessing. Think about the math. If you are trying to make 8% profit while staying under a 5% loss limit, every trade is super important. You can't afford to take bad setups because even a small losing streak could end your game. You need trades that are very likely to win with good rewards. This forces you to be patient, whether you like it or not. Traders who pass these tests share the same traits. They take fewer trades, hold them longer, and focus hard on managing risk. They learned that keeping their money is more important than making money. Once you stop losing money on bad trades, making money on good trades gets way easier. But here is what most people miss about patience. It isn't just about waiting for better setups. It is about having a totally different relationship with the market. Impatient traders see the market as something to beat or fight. Patient traders see the market as something to dance with and understand. This change in view changes everything. When you try to beat the market, every price move feels like a fight. Every loss feels like a defeat. Every missed chance feels like a failure. You are constantly fighting against something way bigger than you. When you learn to flow with the market, you stop taking things personally. Losses become just data instead of insults. Missed chances become saved money rather than failures. You are working with the market's natural rhythm instead of against it. Pros talk about this as reading the mood or feeling the flow. It sounds like magic, but it is actually practical. Markets have natural rhythms, ups and downs, times of certainty, and times of confusion. Patient traders learn to spot these times and change what they do. During times when big money is moving clearly, patient traders trade a bit more because real chances are happening more often. During confusing times when prices are bouncing around, they stop trading almost entirely because few trades are worth it. This kind of patience is different from strict rules about how often to trade. It reacts to what the market is actually doing instead of random rules. Some months, you might make 30 trades because things look good. Other months, you might make 5 because nothing looks right. Both ways can be correct depending on what the market is giving you. The key idea is that patience allows you to take opportunities when they come. You aren't trying to force a certain number of trades per week. You are taking what the market gives you when it gives it to you. This flexibility gives you a big advantage over rigid robots. Computer trading systems work on totally different rules. They are made for super fast, small trades. They can make money from tiny differences because they do it millions of times. Regular traders trying to copy this are playing the wrong game. Your advantage is the exact opposite. You can be picky. You can wait. You can choose only the best times. You don't need to make money every minute. You can afford to wait for real chances because you don't have huge bills to pay. Being picky helps you learn in ways most people never think about. When you are patient, you start understanding the market better. You spend more time watching and less time reacting. You start seeing patterns that you only notice when you aren't distracted. You start to see when big banks are buying or selling. You start to feel when a move is real versus when it is fake. You start to know when a trend will keep going versus when it will turn around. None of this learning happens when you are frantically jumping in and out of trades every few minutes. The value of patience for learning is huge. Every trade becomes a lesson rather than just a win or loss. You have time to see what worked, what didn't, and why. You can figure out if you had a real edge or just got lucky. You can improve your plan based on facts rather than feelings. Impatient traders never learn this deep stuff because they are too busy taking the next trade to look at the last one. They are stuck in a loop of doing things without thinking. They might trade for years without actually learning anything important. The difference this makes gets bigger over time. Patient traders get better because they are actually studying their results. Impatient traders stop growing because they don't learn from their mistakes. This difference gets bigger and bigger. After 1 year, the difference between patient and impatient. During times when big money is moving clearly, patient traders trade a bit more because real chances are happening more often. During confusing times when prices are bouncing around, they stop trading almost entirely because few trades are worth it. This kind of patience is different from strict rules about how often to trade. It reacts to what the market is actually doing instead of random rules. Some months, you might make 30 trades because things look good. Other months, you might make 5 because nothing looks right. Both ways can be correct depending on what the market is giving you. The key idea is that patience allows you to take opportunities when they come. You aren't trying to force a certain number of trades per week. You're taking what the market gives you when it gives it to you. This flexibility gives you a big advantage over rigid robots. Computer trading systems work on totally different rules. They are made for super fast, small trades. They can make money from tiny differences because they do it millions of times. Regular traders trying to copy this are playing the wrong game. Your advantage is the exact opposite. You can be picky. You can wait. You can choose only the best times. You don't need to make money every minute. You can afford to wait for real chances because you don't have huge bills to pay. Being picky helps you learn in ways most people never think about. When you are patient, you start understanding the market better. You spend more time watching and less time reacting. Your edge isn't in finding more chances. It is in having the discipline to ignore most of them. Start measuring success by how well you follow rules, not daily profits. Build confidence by being selective. Remember, the market will always offer another chance tomorrow, but your money and your sanity are limited things that you must protect at all costs.